Good evening friends, I welcome you all on this special capsule on changes in Union Budget 2018 from indirect tax perspective. This Union Budget 2018 is focusing on agriculture, health, education, MSME and infrastructure. It's a populist budget creating lot of job opportunities, and around 20% of GDP is being allocated to infrastructure, around 5 lakh crore rupees. With this allocation, of course, road construction, rail, port and airport, we will see lot of improvement and development in infrastructure, and simultaneously it is going to create lot of job opportunities. But basically this capsule is on changes in indirect taxes by Union Budget 2018. As we all know that excise and service tax is subsumed in GST with effect from July 1, 2017. So there is not much of the announcement made in terms of central excise duty and service tax, but there are certain tariff related changes applicable for existing product falling under central excise duty by the entry 84 of list 1, like 5 specified petroleum product: petrol, diesel, crude petrol, aviation turbine fuel, natural gas and tobacco. So in case you want to run through those changes, you are requested to run through tariff related notification number 1/2018 central excise to notification number 13/2018 central excise dated 2nd February 2018. These tariff related changes are applicable midnight of 1st of February and 2nd February, effectively on 2nd February 2018. In service tax, there are minimal changes, but the important one, the 3 important clauses I would like to highlight: clause 103, 104 and 105. There is retrospective exemption of services given by Naval Group of Insurance Fund by way of life insurance to its member for the period 10/9/2004 to 30th June 2017. This is retrospective exemption. While clause 104, retrospective exemption of services provided by GST and network, goods and services tax network, to central government, state government, union territories for the period 20th March 2013 to 30th June 2017. While clause 105, retrospective exemption is being provided on government share of profit in granting license, leasing to explore or mine petroleum crude or natural gas or both for the period 1st April 2016 to 30th June 2017. So these 3 clauses are pertaining to retrospective exemption from service tax. But what happens if service tax is being paid on such services which is now retrospectively exempted, and these are going to be effected from the enactment of Finance Bill 2018. If service tax is being paid on such retrospective exempted services, then you can file claim for refund within 6 months from the enactment of Finance Bill 2018. It is all pertaining to service tax changes. Now mainly and majorly we have seen the custom duties related change in Union Budget 2018, because custom duty is being left out and not subsumed in GST, and now here Honorable Finance Minister has looked into. He wanted to promote Make in India, create lot of job opportunities. Keeping this fundamental in mind, custom duty rate is being increased for particular sector where government wanted to promote Make in India. In this regard, mobile phone custom duty rate increased from 15% to 20%. Even parts of mobile phone or color television rate custom duty rate is increased from 10% to 15% to promote Make in India, to allow local manufacturing in India, resulting in creating more job opportunities in India. There are other tariff related changes wherein government intention is to promote Make in India, so custom duty rate is being increased to particular sector. You may kindly run through the notification number 6/2018 custom to 23/2018 custom tariff notification related custom duty changes, basic custom duty changes effective from midnight of 1st of February and 2nd February, effectively from 2nd of February 2018. These all are pertaining to duty, custom duty related changes. Now coming to certain important changes which is being made in Customs Act 1962, the first and prominent one, Clause 108, Social Welfare Surcharge. A new surcharge is being introduced to finance education, health, social security. Now this is going to replace existing education cess and secondary higher education cess which is levied on import of goods. So let me explain to you, this social welfare surcharge is going to be levied as a duty of customs in addition on all goods specified in first schedule of Custom Tariff Act 1975, being the goods are imported into India. And this social welfare surcharge going to be levied at the rate of 10% on any duties, taxes and cess which are levied and collected under section 12 of the Custom Duties Act, excluding safeguard duty, countervailing duty, anti-dumping duty, social welfare surcharge on imported goods. So this is the new surcharge going to be levied, replacing existing custom cess, education cess and secondary higher education cess. Now this effective date for levy of social welfare surcharge would be 2nd of February 2018. By notification number 12/2018, social welfare surcharge is being exempted in excess of 3% applicable on petrol, diesel, silver, gold, meaning thereby social welfare surcharge going to be levied at the rate of 3% on petrol, diesel, gold and silver. By notification number 13/2018, social welfare surcharge is being exempted on IGST, integrated goods and services tax levied on import of goods, and GST compensation cess if levied on import of goods, meaning thereby social welfare surcharge is not going to be levied on IGST and compensation cess. As I said, with introduction of social welfare surcharge, education cess and secondary higher education cess in custom duty, it's going to be abolished, and this education cess and secondary higher education cess was levied by Chapter 6 in Finance Act number 2, 2004 for education cess, and by Finance Act 2007 for secondary and higher education cess. Now this clause 106 of Finance Bill 2018 is now omitting, abolishing education cess and secondary higher education cess, but Finance Bill 2018 going to be enacted in time to come. Until then, there is specific exemption provided for education cess and secondary higher education cess by notification number 7/2018 dated 2nd February 2018. Further, There is a specific notification 11/2018 custom dated 2nd February 2018 also talks about that social welfare surcharge is not leviable on certain goods like Areca nut, ATM machine, IT software, and these goods were earlier exempted from education cess and secondary higher education cess. Now, social welfare surcharge will also be exempted on such goods. Having said that, I want to clarify now how the custom duty is going to be leviable when you import goods from 2nd of February 2018 onwards. Until 2nd February 2018, if you are importing goods and assessable value is 100 rupees, then we apply basic custom duty, let's say 10%. So 10% applied on 100 rupees, it becomes 110 rupees. Then we apply custom cess, which is education cess and secondary higher education cess, 3% calculated on basic custom duty, which is 0.3%, so it becomes 110.3 for the calculation of IGST and compensation cess. So if at all IGST leviable, let's say 18%, then 18% going to be calculated on 110.3 and compensation cess if leviable going to be calculated on 110.3. Now, if you are a manufacturer or trader or you are service provider, you will get credit of IGST and compensation cess. Compensation cess credit is available only when your outward supply is chargeable to compensation cess. That is the one condition. Otherwise, IGST credit is normally available to manufacturer, service provider and trader, which he can use while discharging a GST liability on its outward supply. Having said that, what will be the change from 2nd February 2018 in terms of introduction of social welfare surcharge and abolition of education cess and secondary higher education cess? Now on 100 rupees, we will pay basic custom duty 10%, 10 rupees. Then we will going to charge social welfare surcharge at the rate of 10%, and this 10% going to be calculated on basic custom duty. So 10 rupees, 10% calculated, 1 rupee becomes social welfare surcharge, so it becomes 111 rupees. Now you have to calculate IGST and compensation cess on 111 rupees, which is inclusive of basic custom duty and social welfare surcharge. So what happened? If you are taxable person in GST, earlier you were not getting credit of BCD and custom cess 10.3, basic custom duty 10, education cess and secondary higher education cess 0.3, 10.3. Now it would be 11 rupees, 10 rupees basic custom duty and social welfare surcharge would be 1 rupee. So to the extent of 0.7%, the incremental cost of which you will not get the credit in GST regime. This is going to create a little bit cascading in supply chain for the cost of production of goods or cost of provision of services. This is all pertaining to social welfare surcharge and education cess and secondary higher education cess when we look at this provision from custom duty perspective. Now we are moving to another cess, road and infrastructure cess, and this is going to be levied by clause 109 and 110 of Finance Bill 2018. This road and infrastructure cess going to be levied as an additional duty of customs in addition on goods specified in 6th schedule, and there are 2 products specified in 6th schedule, petrol and diesel, being the goods imported into India. Similar kind of additional duty of excise in the name of road and infrastructure cess going to be levied for the goods specified in 6th schedule, which is petrol and diesel, being the goods manufactured or produced in India. Now this is going to be rupees 8 per litre road and infrastructure cess and going to be levied from 2nd of February 2018, and this particular cess is meant for financing infrastructure. So again, this is the new kind of cess, but again levied on the goods specified in 6th schedule petrol and diesel from custom duty perspective and excise duty perspective. Having said that, there are lot many changes is being done under Customs Act 1962, but I am going to pick up important changes for highlighting for your ease of understanding, starting with the new section 25A is being inserted, and this new section 25A empowering central government to exempt goods imported for repair, further processing or manufacture, which is called inward processing of goods, from payment of whole or any part of duty of custom leviable thereon, subject to certain conditions like such goods shall be re-exported after repair within 1 year from the date of order for clearance of imported goods. Similarly, section 25B got inserted, and this 25B is going to empower central government to exempt goods on reimportation, reimported after export. So initially it was exported, then these are reimported for repair, further processing or manufacture, and this is going to be called outward processing of goods from payment of whole or any duty of custom leviable thereon, subject to certain condition like goods reimported must be exported within 1 year from the date of export. Like goods must be reimported within 1 year only from the date of export. So this is the condition to be kept in mind for application of section 25B of Customs Act 1962. Having said that, now I am moving to some important changes. Important changes is being made in section 28, and section 28 is relevant for recovery of duties not levied or short levied or erroneously refunded. A proviso got inserted in subsection 1A of section 28, and this talk about to provide pre-consultation with the custom authority before issuing so-called notice in case of non-fraud cases, when there is no fraud, collusion, suppression, etc. So adjudication authority can provide pre-consultation with the SAC before issuance of so-called notice in non-fraud cases. New subsection 7A got inserted, and it talks about to provide issuance of supplementary so-called notice in prescribed circumstances or manner, but within existing time period. So this is pertaining to supplementary so-called notice. Now going to certain amendment in section 28 subsection 9, this is the laudable change, and this particular section says that there is a delete of word where it is possible to do so to provide definite time limit of 6 months in non-fraud case, 1 year in fraud case for adjudication of so-called notice. So definite time period, and the option of wherever it is possible to do so is being deleted, meaning thereby a definite time period is being prescribed and stated to be that a so-called notice must be adjudicated within 6 months in non-fraud cases, within 1 year in case of fraud cases. This time period may further be extended by senior officer to the adjudication authority for a further period of 6 months in non-fraud case, 1 year in case of fraud case. If so-cause notice is not adjudicated within the extended time period, then it shall be deemed that if no demand was made. So this is laudable change, a specific time limit, and within that time limit, custom authority has to adjudicate the subject matter. Now this time limit has got certain exception, and what is that exception? When this time limit of 6 months in non-fraud case, 1 year in case of fraud is not applicable, when certain grounds like appeal of similar nature is pending at Supreme Court and High Court, etc., or interim stay is being granted, in that case this time limit will not be applicable. And once these regions cease to exist, then time limit will start once the region cease to exist, and then within 6 months non-fraud cases need to be adjudicated, and within 1 year fraud cases need to be adjudicated. New subsection 10b got inserted, and it talks about wherever so-called notice is being issued under subsection 4, which talks about fraud cases on account of fraud, collusion, suppression, and 5 years is the time limit in case of fraud cases, and such so-called notices held not sustainable for region that charges of fraud, etc., have not been established, then in that case said notice shall be deemed to have been issued under subsection 1, which is non-fraud cases. So penalty and other provision as applicable for non-fraud cases going to be applicable for such so-called notices which was initially issued on fraud cases, but it could not be established. Thereby all the application of non-fraud cases going to be applicable for such so-called notices. Section 28I subsection 6 is also getting amended, and it talks about advanced ruling authority has to pronounce the order within a period of 3 months. So period limit is being reduced from 6 months to 3 months. Amendment in section 128A, remand back power is being given to the Commissioner Appeal. Remand back power given to the Commissioner Appeal when he can remand back to the adjudication authority in specific cases like order passed without natural justice, no order passed after reassessment under section 17 of Customs Act 1962, or refund order passed crediting fund account without any finding. In all such cases, Commissioner Appeal is being empowered to remand back the case to the adjudication authorities. So I have picked up the important changes in custom in terms of rate, in terms of introduction of social welfare surcharge, then abolition of education cess and secondary higher education cess, and then introduction of road and infrastructure cess, mainly applicable for the goods falling in 6th schedule, which is petrol and diesel. Now coming to the last conclusion part. This point is very important, that we were all looking into that Union Finance Minister going to announce some roadmap for GST. Why roadmap for GST is required? As we all know that Economic Survey has taken GST as a major policy change, but in this Union Budget 2018, and Union Finance Minister is the chairman of GST Council, could have, from my side, looks like could have added some word and could have given some roadmap in terms of medium to long term how we are heading in GST. And what are the point which was considered in Economic Survey? GST is being considered as a major policy change, no doubt about it. And Economic Survey has acknowledged that GST has got teething problem. teething problem pertaining to GST and network. We all know that GST and network is struggling in terms of registration initially, subsequently payment, and then return filing. Still we are not getting solution full-fledged, and we can't say GST and network is up to our satisfaction. So Union Finance Minister could have said by when this GST and network is going to be ready, so that we can have smooth because GST is dependent on automation and electronic mode. Unless GST and work, these teething problem are creating uneasiness, and it is not towards ease of business for the taxpayer, to make it good and simple. Going then, this GST has also increased the number of taxpayer, and 50% taxpayer has got increased from 68 lakhs, it is now 98 lakhs approximate. 50% taxpayer base is being increased, meaning thereby in time to come, government going to collect extra incremental GST revenue. We all know that GST is being envisaged that it will have incremental GDP growth. Once incremental GDP growth comes, definitely it is going to result in the government exchequer, be it central government or state government. But when taxpayer base is increasing, it is also important that government should provide hand-holding, complete hand-holding to the taxpayer base, so that the smooth transaction can happen in GST. But we know GST has got lot many glitches. Apart from GST and network, we find within the law lot many clarification and amendment are very subjective, and law interpretation in terms of classification, rate, valuation, taxability, doubt exists in many of the areas. So those areas need to be looked into. Anti-profiteering benefit to the consumer, like it is being stated that anti-profiteering consumers are getting some benefit, but still there are certain sector where government is having perception the benefit must be passed on to the consumer. But for anti-profiteering, it is being stated, and we are repeatedly saying that two parameters prescribed. If tax rate is being reduced or credit is made available, which was not available earlier, then there are the incidents. Commensurating benefit must be passed on to the consumer. But is this the parameter? For fixing up prices, there are lot many factors works. There are direct costs, indirect costs, and we all are looking for guidelines. How to calculate commensurating benefit to be passed on to the consumer? No guidelines is being prescribed. An anti-profiteering measure is going to be applicable for 2 years, but we are already over by 7 months. Starting from July 2017 to January 2018, 7 months gone, but we are not having any kind of specific guidelines how to measure the commensurating benefit. At a company level, am I supposed to calculate at SKU level or product level or unit level or locational level or overall company basis? Even in service sector, construction and real estate, we have seen that initially they were not allowed to avail credit on input, but if maximum percentage of their construction is being done in pre-GST regime, and now the GST rate is 12%, how the benefit will come in the hands of such service provider when major construction work is being done prior to 1st July 2017. So anti-profiteering is a very subjective term. No guidelines is being prescribed. Even the broader guidelines could have been provided to help and understand, not only for the taxpayer but for the tax department as well. Once complaint is being filed to the state steering committee and it is going forward, it is being given to the DG investigation and inquiry. It is required on what parameter and what are the relevant parameter which they are going to consider to determine commensurating benefit in terms of tax reduction rate or credit made available which was not available earlier. But we all know for fixing up prices, lot many things works seasonal prices. In season I charge higher prices, and when season is not there I charge low prices. So we need to have guidelines out, and that may vary from one industry to another industry, but requires to reduce the litigation. And this commensurating benefit is a subjective term and dependent on lot many parameters. But a guidelines, important guidelines is required for measuring anti-profiteering, going to revenue collection. It is being stated that GST revenue collection is going to increase in time to come, and stated to be that R&R going to be around 15% to 17% in time to come. If this happen, then the GST slab, which is now 5%, 12%, 18% and 28%, may reduce to only 2 slab, and after 2 to 3 years there may be GST 1 slab as and when decided by GST Council. But this is very positive sign that GST Council is acknowledging that R&R would be around 15 to 17%. That will result in for reduction of GST slab from 4-tier rate to 2-tier rate. Cooperative federalism. Of course, we agree that GST Council has really enthusiastically, they have given cooperative federalism where center and state both are coming together and deciding all subject matter of GST by consensus, and that is the realistic example of cooperative federalism. Center and state both are working together to make GST successful for the country. But what could have been better in Union Budget 2018 had Honorable Finance Minister has announced something pertaining to inclusion of 3 specified sectors: petroleum, 5 specified product, petrol, diesel, crude petrol, aviation turbine fuel and natural gas, real estate and then electricity. Inclusion in GST, nothing is being stated today, because petrol and diesel is a basic need of any sector in supply chain, be it manufacturing sector, be it a service sector. They pay existing central excise duty and VAT on petrol and diesel, of which we don't get any credit in GST regime, and that create the cascading effect. It would have been better if Honorable Finance Minister would have provided some kind of roadmap for inclusion of 5 specified petroleum product: petrol, diesel, crude petrol, aviation turbine fuel and natural gas, real estate and electricity in GST. We all know petrol and diesel is the basic need as a raw material for manufacturing sector and service sector, on which we existingly pay central excise duty and VAT, of which no credit is available in GST, result into cascading of taxes in our pricing, cost of production of goods, cost of provision of services. So this is very important that GST Council, center and state both must work on at least inclusion of petrol and diesel in GST so as to done away with the cascading of taxes. Now coming to my last comment of Union Budget 2018. From indirect taxes front, like you have seen my earlier video, that I have categorically said that we will get major change in custom duty, and GST related changes would be coming as and when GST Council decide. But it would have been better, center being the ruling party, center being the major party in GST Council, they should have given some kind of roadmap way forward for GST. Like today being 1st of February 2018, eBay bill is introduced for all interstate movement. Since morning we were listening that this eBay bill site, national eBay bill site is not working, and by the time I am recording this video, it is being stated by Twitter that eBay bill is being deferred and a new date going to be announced. Until then you can do on trial method basis. So what is the idea? What is the message coming out? What is being stated for this deferment of eBay bill? Glitches in the system. So we have seen the same glitches in GSTN network when GST was introduced. Similarly, we are finding for the eBay bill introduction, there were a lot of glitches since morning and we were trying and this site was not working. So only point which is coming out that government want to make GST successful. It is possible provided our infrastructure must be ready, and this infrastructure is important because GST is dependent on automation and e-platform. We have seen the GSTN still struggling with. Now this eBay bill site is also having glitches. Let's have something concrete and come out with the good infrastructure to really make it successful for all of us together, to provide ease of business and realistic meaning of good and simple as stated by Honorable Prime Minister. With this, I am thanking each one of you for watching this video. In case of any suggestion, feedback or representation, do write back to us. We will definitely take up your subject matter with the concerned government authority. Thanks once again for watching this special capsule on Union Budget Changes 2018. Thank you very much.